Today is the 24th of May, and let's discuss the results of the current week in the markets and what implications the current situation could potentially have, and what I'm doing about it all. So, probably the most notable news which came during this week is about tariffs, and so Donald Trump is back. And he is not satisfied with the progress of negotiations with the European Union. So that's why he wants to impose 50% tariffs on European exports to the States starting with the first day of the next month of June. So there is not too much time left. And personally, I think that there is a good chance that they will work out something. Obviously, Donald Trump does not discuss his plans with me, nor do I have a crystal ball to look into. But what we have is we have precedents, and before that, we saw similar um, threats. I don't know what's the right word for this. Maybe it's a threat in a hard negotiation approach, which current administration exercises often, or like a tactic. But what we saw at the end of it is that these threats all often get reversed. They often get backtracked, uh, especially when the market signals that it could be problematic. So this now signals this situation now is sort of a bit funny because obviously European Union is one of the major trade partners of the States, not as crucial as China, but very significant for the States. And it seems like that the market doesn't trust the bad situation, the bad development at the moment, because obviously we've seen uh, sell off on Friday, but mostly the indexes have recovered, at least tactically. We saw closes at the local highs. So my personal perception is that the market is a bit mm, optimistic, so to speak. They think, market participants think that this situation will be sorted out. So this is the major situation, and not only European Union, but also another important development is about iPhones. iPhone is a staple electronic good in the States. We will not discuss the value you get for the price or how modern really it is, but it's like it's a commodity in my perception. Quite expensive, of course, but it's like the basic good. If you want to be accepted into modern society, you have to have an iPhone. Uh, at least as I see, as an outsider. Obviously, I'm not in the States now, but iPhone is a staple. So this is quite serious because it's quite expensive already, and it will get even more expensive unless Apple localizes production of iPhones in the States, and it's quite difficult to derive exact requirements for that. Also, will um, will the iPhone in which the case is put around the electronic components, like electronic components just put into the case, will it count as an iPhone which has been produced in the States? We don't know. So it's just a post on social media now, but it could very well be quite problematic for Apple uh, to do this. And the more pronounced is the requirement to localize the production, the more problematic it will get. And that brings us to the situation. I want you to understand this situation as a part of a bigger development which is happening right now. So this is important to keep in mind because my own perception and uh, the goal of this framework is actually to infuse uh, the current volatility with meaning. So when some events which could be perceived as chaotic or random, when you put them in a larger frame, they suddenly start to make sense. And this frame means that, in my opinion, of course, that the current administration and American elites at large want to make a transition from a global economic and political superpower, basically the only global political and economic superpower, to a more regional state, a more regional power. Why? Because they have overextended themselves and they need to print more and more money to fund their military agenda. They need more and more money to sustain their roles in international political alliances. And they have to do this while also spending increasing amounts of money to maintain their bureaucracy, both state and corporate. So what they want to do now, and obviously this is a risky situation, and it's inevitably leads to a decline, monetary decline, political decline, and business decline, which could be drastically sped up by events like nature cataclysms or a big war, which could be surprisingly lost, stuff like that. So this is a historic pattern, and this is a historic pattern which I have derived from studying Rome, and which, to my great pleasure, was confirmed and obviously upgraded because I'm not that smart by Ray Dalio's book, uh, "The Principles for Dealing with the Changing World Order," or something like that. So we're witnessing exactly the same cycle through which all the previous major powers which have unified the world have went through. And the difference now is that the states know about it and they want to make it organized. So they want to shrink back to the regional status. They want to withdraw from military alliances, political alliances, but at the same time, they want to maintain the role of a dollar, of the dollar as the global reserve currency and the main currency for global transactions. And actually, they have good chances of achieving this because, weirdly enough, declining global powers often leave their currency behind, and the currency sometimes outlives their status as a global empire. Probably that's why you hear the name of British pound, and we will talk about British pound in a moment. And you still think about something very important. Well, that was true, and it is still true to a large extent because at some point the role which the states play today was carried out by the British Empire, namely in the first half of the previous century. And the pound was quite like the dollar is today. And the pound was used by the world for international transactions, for storing reserves, and for national investment or just as a hold of value for some time after the British Empire basically stopped existing. So, but it's a tricky situation. Lots of things could go wrong at the moment. But what we see now, I think, confirms, at least partially, at least tactically, that this plan could be working. Why? Because, as I've mentioned before, the market is resilient, and new tariff announcement is perceived more like a negotiation tactic, not like a disaster by the market. If we judge good close as a signal for that, but what we see at the same moment, we see weakness in dollar, and that basically means that the rebalancing between I don't think it's important to clarify that I don't think that the dollar is done at this point. What I think is that the rebalancing is happening. And I see some confirmation for that. For example, I have recorded the short video yesterday about the pound and euro. And euro is I'm quite bullish on euro fundamentally because it's quite obvious that they are easing now. They are lowering rates, and they will be investing in their infrastructure a lot in the coming years in all aspects, like civilian infrastructure, military infrastructure. Maybe they will even consider some deregulation in order to sustain innovative investments in their block. Because right now it's totally outsourced outsourced to the states, and it's not good for technological sovereignty. So there is a good chance that they will touch that as well. Britain is not that fundamentally interesting right now because they were easing before and they got a spike in inflation, which is not good. But at the same time, the strength in pound yesterday is very interesting, and I think that it could be there could be another factor at play, and the main theme here is just a necessity to find other markets for all that incredible amount of capital which has been accumulated in the states. So when I was recording that short, both euro and pound were trying to break out their charts. They are at the end of the short video, and they sort of got a bit compressed when these new tariffs were announced, but they closed strong, and I think that means something. I mean, I think that it still means that global capital wants this rebalance. They see it is necessary, that it is necessary, and I think that uh, it all happens in accordance with the plan which the Americans are executing. Sound a bit convoluted or maybe a bit weird, but um, you'll if you think about it, I think you'll start seeing the intentionality behind this situation. They don't they want other parts of the system which was largely created by them, by the states. I mean, after the Second World War, they want these parts of the system to become more self-sufficient, so they won't need to exercise their military and political presence. So they will ease the budget burden on themselves, which will allow them to pare down spending and possibly improve their situation with the budget deficit. This is the idea um, behind. This is the result of my assessment of the current geopolitical trends, and so we're sort of softly transitioning to the implication side of this. And I have already mentioned euro, and I have already mentioned British pound, and shorting stuff, short selling stuff in the states is could be, in my opinion, quite a fruitful area in this year and probably beyond that, maybe a year more, or maybe even after that, it could be relevant as well. So the currency itself is a good expression. You could actually look at Bitcoin as a short dollar expression for this trade as well, and that's why it's so strong these days. And that's while the Fed is cautious on the rate decision. So weird enough, right? Before that, the correlation was quite high, and these days the Fed is reserved and Bitcoin is going up. Why? Short dollar. Another alternative harbor for the capital, uh, to park your capital while Americans are figuring out their efficiency problem and their deficit problem. And when I say efficiency, I mean both political, not political, both bureaucracy, but also corporate bureaucracy, which is a good, um, which is a formidable problem right now, quite noticeable in lots of Americans' mega corporations, and that actually brings us to shorting them. Not only they are, lots of these names are too big to be efficient and too big to be transformed into something more lean and more adequate to the present day, but they are also having some practices which are in direct conflict with what the current administration proposes. And my favorite here is "Make America Healthy Again," Um and that brings us to American food and chemicals, retail chemicals. I mean, and in that domain we have Kraft Heinz, we have PepsiCo, um, quite quite likely Colgate, Palmolive. These are not ideas, and some of them I have in my portfolio shortly, some of them I don't. This is just a bias. So not only they are very big and inefficient, but they also use some components in their produce, which quite likely will be targeted by regulations in the coming months, because obviously these components are bad for health. And if you try to eat this food, you will become sick, both physically and mentally. And I think there is a good chance that this will be the second wave of the Make America Health Again shorts. The first one I have completely missed, and it was working even before the election, and it was about pharma at large. So right now, pharma is have priced in some of these changes in regulatory landscape, but in my opinion, now it's food time, and the food will start pricing that in. And apart from that, you could actually look for some shorts in the sacred places of the market, and namely the Magnificent Seven. Why? Because obviously too big to be efficient, lagging behind the innovation, supposedly at least, because they are trying to catch up with the AI theme, but they are failing. And we have examples for that in the States, because OpenAI, a startup company, not a division of Microsoft or Google, uh, one up them all and created probably the product which was, by the way, intended by Steve Jobs when he introduced Siri back in the day. Or was it him? I think that he has introduced the first version of Siri before he passed away. And the company was trying to do it, Apple, I mean, and well, OpenAI just did it, and DeepSeek supposedly did even slightly better with far less resources. So that tells you a lot about potentially, potentially the situation could be different, in fact. But what we see now, as of now, these ideas are confirmed by the market. They are confirmed by the weakness in Google and in Apple. And Apple, of course, not only that is a problem for Apple. I mean, inability to produce uh, not a commodity, which is which an iPhone is, but a truly innovative product. This is one problem for them. But also they are sort of getting hit by the macro theme of transformation of America into a more local power. I call it soft landing. Obviously, it's a term from the other domain of economics, but I think it's quite applicable here in this situation. They want to soft land the country and to avoid drastic um, drastic situations further down the line in the future. So I think that's the main result of this week, confirmation. So what we saw is that the tariffs are a tactic, and the market perceives it more or less constructively. It's like a controlled bloodletting. They are draining the excess liquidity from the system. They let this liquidity to be absorbed by other jurisdictions like Eurozone and Britain, but not China at the moment. At the moment, because China is a competitor, and we also see that sometimes directly the current American administration is launching these. They are prompting American business to restructure, to become more lean, to pressure them maybe in becoming smaller and more agile and more innovative. And obviously, they are pushing them to drop practices which are harmful to the population of the states, actually. So, despite the fact that this week was uh, sort of problematic and news were, um, I should say, like mostly negative because of the tariff situation, the underlying trends at this moment tell us that if my assessment of the situation is right, of course, the macro situation, on the tactical level, they are executing well so far. And in terms of actual positioning, that means that you could be long potentially other currencies and other markets, which will benefit from this rebalancing of capital with this flush of excess liquidity from the system. And you could also potentially benefit from restructuring, from the effort to raise efficiency of bureaucracy, which is actually is very common in well-established countries, which sort of get in the later stages of their global dominance. They have these convoluted systems everywhere, like in taxation, in governance, in corporations, and they are resilient. Quite often, they have checks and balances, but they become excessively complicated. They stifle innovation, they stifle growth, and this is very visible in European Union actually these days. So this could prompt them to start this process of optimization as well. And this is how they could avoid potentially both them, not only the states, the European Union and the states could avoid hard landing in the future. Okay, so there are also some other areas which could be potentially added to your portfolio. Some of them are quite controversial, and I will be revealing them during or after the next week. So so far so good. Yeah, I think that's it for now. Yeah, let's be in touch.